Hello all, welcome to my channel Meet CISO. Today we are exploring the topic risk treatment. Now, before we jump into treating risks, let's quickly connect the dots. Remember, before that you can treat a risk, you first need to assess it. That means completing the risk assessment, which includes risk identification, risk analysis, and risk evaluation. If you would like a detailed, easy to understand breakdown of these steps, just click on the little I button at the top right corner. I have already made a video explaining the entire risk assessment process. Alright, so now that we have assessed our risks, it's time for the next stage, risk treatment. Risk treatment generally involves four strategies: risk mitigation, risk acceptance, risk transfer, and risk avoidance. Today, we will discuss all these four. Let's start with the first one, risk mitigation. Organizations mitigate risks by applying safeguards or controls that reduce the likelihood or impact of those risks. Now, the main goal of risk mitigation is to bring the risk level below the organization's risk appetite. That's basically the amount of risk the organization is comfortable with. In this scenario, the risk is already below risk capacity, which is the maximum level of risk that company can handle. Because if the risk ever crosses that limit, it could cause severe damage or even break the organization completely. If you'd like to understand the risk terminologies like risk appetite, tolerance, capacity, inherent risk, tolerance risk, in simple and memorable analogies, just click on the I button at the top right corner of your screen. I have made a quick and easy video explaining all of that in detail. Now, back to mitigation. Risks can be reduced by applying control across three key areas like people, process, and technology. People controls like giving employees regular training to recognize and avoid threats. Process controls like setting up approval steps or mandatory checks before completing a task. And technology controls such as implementing firewalls, enforcing strong passwords, or patching systems regularly. So that's what risk mitigation is. Now let's move to understand next topic, risk acceptance. If you have noticed, even after we mitigate a risk, there is always a residual risk left behind. So what happens to that remaining risk? Well, if the risk is below the risk appetite, the organizations decide to accept the risk. Here is how the logic works. If the company wants to reduce the risk even further, it usually requires extra resources, most commonly money. But if the cost of mitigating that risk is higher, then the potential loss occurs. If the risk happens, then it's simply not worth it. Example, see here, if the risk is mitigated once, yeah, here the risk is mitigated once. Now we are here just below the appetite. Now organization wants to mitigate it further, but mitigating it further to reduce the risk will need some money. Now, if that money is too much and the risk that that is realized, then it will not that worth of spent money on that controls. In that case, the organizations do decide to accept the risk and not to proceed any further. Now, let's move on to our next part of risk treatment, and that is risk transfer. As the name suggests, transfer simply means shifting the risk to someone else, usually a third party like an insurance company. Let's understand it with an example. Imagine a company has already mitigated the risk, but even after that, the risk is still above the organization's risk appetite. If further mitigation is either too costly or not practically possible, then the best option is to transfer that risk to someone else. A classic example is buying a cyber insurance or liability insurance. The company pays a premium, and in case of major loss, the insurance company covers the cost. Risk transfer is most commonly used when the likelihood of the event is low, but if it happens, the impact would be huge. But here is a catch, and this is super important. Even though the financial loss can be transferred, the reputation loss still stays with the organization. So, yes, money might come back, but trust once lost doesn't. Now, let's move to the next part, and that is risk avoidance. This is the last part of risk treatment, and that is risk avoidance. Now, avoiding risk means the organization decide not to proceed with a project, activity, or technology because the risk involved is just too high. Think of it like this. If implementing a new system or launching a new project introduces risk that go beyond the company's risk capacity, then it means even if the project promises great rewards, the potential damage from a risk being realized would be catastrophic, maybe even business ending. So instead of jumping into danger, the organization simply avoids the proceeding with the project. Now, let's see how much you have learned from today's video. Please go through this question and give your answers in the comment. The first question is, a company identifies a low impact risk that remains even after mitigation efforts. Further reducing the risk would require a costly security solution that exceeds the potential loss value. What is the best action for the company to take? A. Implement the additional controls to eliminate the risk completely. Transfer the risk to a third party insurance provider. Accept the residual risk and monitor it periodically. Avoid the project entirely to remove the risk. I will be waiting for the answer in the comments. Next question. A financial institution plans to adopt a new AI-based customer service platform. During the assessment, it's found that the technology introduces high regulatory and data privacy risks, far exceeding the organization's risk capacity. What would the company do? Accept the risk and continue using the platform? Transfer the risk to the AI vendor through a contract? Mitigate the risk by adding more security controls? Decide not to implement the AI platform at all? Last question. A logistics company is concerned about the potential finance losses due to vehicle accidents during deliveries. Implementing advanced vehicle safety system for all trucks would be too costly. What is the best approach for the company to manage this risk? First, stop deliveries to avoid the possibilities of accidents. Purchase insurance coverage for the delivery vehicles. Accept the risk and handle damages internally, and or provide driver training and routine vehicle inspections. I will be waiting for your answers in the comments. So before you go, let me know in the comments what topic you would like me to cover next. If this video helped you understanding the steps of risk treatment, give it a like, share it with your friends and colleagues, and don't forget to subscribe to the channel for more cybersecurity insights made simple. Thank you all.